Oil just hit $101. The Fed decides tomorrow, and Nvidia dropped a number that could reshape every portfolio on the planet.
Nvidia's sales are going to be over $1 trillion.
Louis Navellier has been running his quant model through all of it, and what it's flagging might surprise you. Let's get into it. Welcome back to Navellier Market Buzz. Oil, the Fed, Nvidia's trillion-dollar project. One thing our subscribers need to know about this market right now. What is it?
Well, first of all, oil is still oscillating, but it's not bothering the markets anymore because it's widely perceived that when the fighting is over, the price of oil will come down and the world will be a safer place. So that's President Trump's promise. Not everybody believes him, of course, but the truth of the matter is the fertilizer situation is probably more serious than the oil situation. They need to get fertilizer in the ground so food prices don't go up too much. And, Qatar and all these other countries make a lot of nitrogen-based fertilizer from natural gas. But this is the time of year where demand goes up for oil because the weather's getting better. People are getting out and about a little bit more. But the energy stocks are not doing as good as you would think they would because we are expecting the prices to fall when the glut gets re-exposed.
Now let's get into the stories driving all of this, and we have to start out with Nvidia. If Nvidia is the backbone, who else wins? We saw Uber was up 5% today on a robo-taxi deal with Nvidia. Is this real or hype?
Well, everybody that makes an affiliation with Nvidia wins, and these are what they call circular deals. Sometimes companies don't have the money to buy the Nvidia chips, so Nvidia does a deal with them, and then all of a sudden they're instantly worth more money, and they can do a bond or secondary stock offering to raise the money. Nvidia's sales are going to be over $1 trillion soon, and that's 100% sales growth, and that's for next year. Right now, their sales are estimated to be up 79%, earnings like 119. They're going to be revising all those estimates higher. So Nvidia is still dominating, and it's amazing for a company this size, that they still have accelerating sales and earnings momentum. But right now, Wall Street is focused on who's making deals with Nvidia. The optical companies seem to be doing the best. The Cornings, we have one called Ubiquity, UI, and then Ciena, CIEN, all done very, very well. But anybody affiliated with Nvidia, storage has also done very well. We own Micron, MU, and Seagate Technology, STX. So if you just show stock charts of all those stocks, people can see how excited they've gotten.
So while tech is moving, something else needs your attention. Brent hit $101 today with Iran war, the Strait of Hormuz being closed. What does this mean for portfolios?
Well, the good news is WTI is $95 a barrel. Now that's West Texas Intermediate crude. That's predominantly what we use in the United States. Europe, it depends more on the Brent ultralight sweet crude, which is becoming increasingly scarce. Essentially, the oil that used to come from Nigeria, Libya was the sweetest crude out there, and that's where the Brent crude comes from. But the WTI's, again, $95. Again, it's perceived that we're going to have a glut here soon. They got to get the Strait of Hormuz open for the fertilizer. Israel keeps taking out Iranian leadership, the head of their security services, and then one of the brigadier generals that was suppressing the domestic protests. So as they continue to take out this leadership and continue to obliterate the missile and drone factories, Iran should not be firing on their neighbors much longer. So this all should die down soon, and hopefully we'll have peace and prosperity in the world. Obviously, we're going to have to work with the new leadership of Iran. Obviously, everybody wants Iran to be part of the international community. So we'll just see who's left in charge and who see if new leadership rises up.
We have geopolitical risk on one side, and the Fed is meeting as we speak. Decision tomorrow. What are you watching for, and what could actually move markets?
Well, we should get a split vote because the U.S. economy hasn't created jobs in 5 out of the last 9 months. And the AI investments by Meta, Amazon, Google are a lot. And the more they invest in AI, the more layoffs they may be having. Okay. And It was already rumored that Meta might have to lay off 20% of their workforce because of all the AI enhancements. So there is a job problem in America, and hopefully we'll have some people in the Fed voting to cut rates. Regardless, they'll be probably signaling when they will be cutting. Most people expect a cut by May. Market rates did back up just a bit, so I don't expect a Fed cut, but I do expect a split vote. And we want a dovish FOMC statement.
Stepping into individual names, Lululemon reports tonight, down 50% from its highs. Is this going to bounce back?
Only if they guide higher. Yeah, they have to guide higher. Their sales and earnings are just not spectacular anymore. They did have a decent surprise, but they're just well below everybody's expectations. So, and Lulu's complicated. Lulu at one time was making a lot of money from sports apparel, men's socks and things. Then they got into making men's pants. A lot of ladies buy that for their other half. And, they're just going to have to give us good guidance.
Now, Qualcomm just sent a very different signal. 20 billion buyback, raised dividend. What is this management telling us?
It's trying to put a floor under its stock. When you have a very high return on equity and a relatively low P ratio, they just take their capital and buy their stock back. And so that's what they're trying to do. They're trying to put in a floor under their stock.
And KKR, Blackstone, BlackRock, all up 3 to 5% today. Not a coincidence. So what is driving it, and should our subscribers be paying attention to alternatives?
Well, there is a lot of articles out there on private credit right now, and it's complicated. But the bottom line is they're getting a relief rally. There have not been investor losses. If there is a loss, they're eating it internally. And so they're getting a bit of a relief rally. But private credit's not going to go away, but it has been wounded temporarily.
All right, let's get into some of your questions. We got a great batch this week. Now, one of our subscribers wanted to know about the 3 Latin American airline stocks.
LATM is the Cadillac. It's the highest ranked one. I keep seeing it on my screens. I haven't bought it. Temporarily, they're going to face higher fuel prices because of the disruption in the Middle East. So that might affect them for one quarter, but that's a Chilean-based airline. And in Chile, they ship a lot of their cargo on planes because, it's a mountainous country. It's hard to put on a train or a truck. But that's a very well-run airline. Copa's okay. They're competitive. And I believe that's out of Panama. Copa's a pretty well-run airline. Again, higher fuel costs. Aeromexico, I would just worry about because they had that little glitch in tourism for a while. And hopefully that doesn't affect their overall business. But all these airlines are going to be held back by higher fuel costs for at least this quarter.
Next, economy looks good on paper, but the chart is ugly. Which one do you trust?
I trust the actual revisions to GDP. We are getting huge productivity gains. We do have a shrinking trade deficit because of booming exports. In January, it was due to gold. In February, it should be due to energy exports, LNG, refined product, and obviously crude oil. And then we just need consumers to cheer up and be happy. And a lot of that won't happen to the spring. So the second quarter is going to be much stronger than the first quarter. First quarter was held back by weather. It's kind of hard to go shopping when it's a popsicle outside and you can fall on the ice. We will have better second quarter GDP growth than the first quarter. But last I looked, the Atlanta Fed was 2.7%. So that's decent, and they'll probably have some upward revisions.
Now, what do you think of UPS?
It's struggling to turn around. They had these contracts with the government that gave up. FedEx seems to be winning in the shipping wars, but it's like any company. As long as they start to beat and surprise, I'll take a second look at it. But right now, it's not on my radar.
Silver is making noise. ETFs or miners, where does the model want to be?
I'd rather be in the miners. There are good ETFs. I mentioned that on Maria's show that I did last Friday.
And you like the mining companies better than buying the actual gold?
Yes, there's a lot of good gold ETFs out there, obviously, but I'm right now buying the miners.
Although there are good ETFs out there through Wisdom Tree, I would rather people buy the actual securities. You'll make more money in the stocks.
Now, we got this from 2 different subscribers. HR just got added to the S&P 500. Does the quant model still like it after the pop?
Yeah, when you get added to the S&P 500, you get institutional buying pressure, and that's good. And your volatility starts to subside a bit because you just have more and better liquidity in your stock. So when a stock's volatility drops, quantitative grade can go up. Yeah, getting out of the S&P is a big deal. and it also got added CIE.
Now for Sezzle, the buy now, pay later name, big run lately. What are your thoughts?
It's consumers are struggling and they're helping consumers manage their payments. They do charge very high rates. I don't recommend people use the services, but let's face it, half of America has a debt problem. And this caters to half of America. And they keep capturing market share. The retailers are pushing their services. You can do layaway plans. You can make payments in 4 installments. So it's the retail industry is actually pushing Sezzle. And that's why they have very steady sales and earnings growth.
Now, before we wrap, a subscriber has been holding ISSC since we covered it and it doubled. So we'll take that. They're also asking about Flotek getting into utilities.
Well, let's talk about ISSC. They've had 2 huge earnings surprises, and that's really allowed the stock to soar. Unfortunately, their forecast sales and earnings don't look too good at this moment. So you might want to take the money and run with that one. Now, Flotek, I'm familiar with this stock. The good news, it was a fundamental A stock at one time, but then it just missed. But its forecasted sales and earnings remain strong. As far as it diversifying in the utility business stuff, we'll see. But they are an expert in fluid dynamics and handle fluid and how to design all kinds of great industrial systems. So I still own Flotek. I haven't managed accounts, but I'm just a little annoyed they missed last quarter.
Great. Well, thank you all so much for your questions. We really appreciate them and we read all of them. So thank you again. Please subscribe if you haven't already and give this video a like. We will see you this Sunday for a new video.